Hey traders, David Frost, and this video is specifically designed for traders who are actively trading or would like to be actively trading the S&P during the trading day, whether it's the SPY, the ES, which is the S&P E-mini futures contract, options on the S&P, the exchange traded products such as the leveraged products, or anything else in between. This video is going to describe what you can get, what the benefit is to inside the numbers to you during the trading day. We're going to discuss and go over in detail the commentary from one specific day, one morning's worth of commentary that included a nice trade. Why do traders sign up for Inside the Numbers? Because they want to make money in the market. There are several ways, there are many different ways to make money in the market. Let's detail out what Inside the Numbers can do for you. This video happens to be made on June 3rd, 2021. The first thing Inside the Numbers members see is the pre-market commentary. It's posted around 0:30. That means it's really early in the morning. We're just getting the lay of the land. On this particular day, the market was a little bit red. We're waking up red. Our objective is to pay attention and get prepared for game time. As the morning grows on, we have some early thoughts. The market's trading down, so we know that there's going to be an increase in volatility. Volatility is a trader's best friend. In the previous videos, the common sense market analysis videos posted on YouTube at night, we've been discussing 417. That's why this is so important, because there really is a three-pronged approach to how I teach traders how to be successful in the market. The first prong is learning the foundation of how the markets work. That's done through the Lazy E-mini Trader course. Each and every night, I post a video with the day's recap. We go over the market activity during the day, and we get ready for the following day. In that video, the previous day, which was June 2nd, we discussed 417. In fact, we discussed it many days before this day. So we have an awareness of how important and the reason why it's important, 417. In the pre-market, they were already running a test down in that neighborhood. At this point, the market's not open yet. We're in uniform, but we're in pre-game warm-up. Let's see what else we have as the day gets underway. Still before the open, we have to discuss some things that are likely to happen around the opening bell. Sometimes the buy the dip crowd will rush in, scoop up whatever they can, while driving price right back up within minutes. We've seen that many, many times. On the flip side, and we play umpire calling balls and strikes. Other times where it looks like they're doing that, however, the market fails, they get, and this refers to the buy the dip crowd, they get a pie in the face, and the destination was to be lower than what the pre-market ran the test of. So at 8:50 in the morning, 40 minutes before the opening bell rings, we don't know which one is on the docket today just yet. Now, let's see what else we have as we get closer to the opening bell. Since again we play umpire calling balls and strikes, we must have the awareness for when they do pop them up, when they do stage a rally, where would they be going? Where are those important areas where it would be overhead resistance? Overhead resistance can be an exit for a long trade. It can also be a short trade. Not all numbers are created equal. We'll get to that in a moment. Now, as they're opening the market, the awareness is, the decision on the table is, which one will they run a test of first? The northern number or the southern number? Patience. As the market begins to unfold, as you see by 9:36, the writing was on the wall. They're trying to get to the 417, give or take. Regardless of whether they come up short or spike it, they'll snap back from that zone at some point sooner than later. This is important. It's a reasonable risk reward down there for at least a scalp trade or more. Now, 6 minutes into the day, we're setting up our first trade. A few minutes later, she's home. The 417 test was underway. Could take some time and they could spike it even down to 416. but it's an area that should produce a bounce at some point. It's showtime for the bulls. Now, so we can get an image of what we're discussing in the notes, here's a 5-minute SPY chart. The big gap here is the spot between the prior day's close and the opening print on this day. 417 represents the horizontal trend line. They reached it, they spiked it, they turned around, and they rallied away from it, exactly as what was prescribed. When markets are headed to a specific spot, doesn't matter whether it's a stock, the index, a commodity, a cryptocurrency, an NFT, it makes no difference. When a vehicle is headed to a specific spot, it's headed to a destination. The faster it gets there, the more likely that you're right in terms of what that destination was. At 9:47 a.m. in the short run, 417 will be our pivot. A recapture will bring buyers to the table. Keep in mind, at the time, they were still below 417, so what we're saying is, once the bulls can recapture that spot and stay above there, more buyers will surface. Let's see what else we have. While they're below 417, we're citing the numbers below that are also important, therefore will represent other support numbers. 956, they're fighting over 417. No surprise. We're already citing the first target for the long trade in the spirit of being prepared. Now, here's where there's another learning opportunity. How am I executing the trade? I'm planning on taking half off the table when they get up to 417.85. I want to keep some in my pocket in case they keep going, and if they come back down, I've still got a profit in my pocket. This is the way we create a risk-free, emotionless trade. Back to the imagery, as you can see, 417.85, slightly higher, was resistance. It was overhead resistance. It was correct to at least take some profit at that spot. At that time, any trader doesn't know whether the market's going to retest the lows or make a higher low and take off in the northern direction as they did. That's why we have to treat it as a business and take profit along the way. We keep going as the morning grows on. 10:08, no change. They're doing the thing they were supposed to do. What is that? They were supposed to get to 417, run a test, turn around, and go back in the other direction. By 10:09, we have our first target in our pocket. The rest is trader's choice. Nice trade. There's your risk-free, emotionless trade. Moving along. Now we take the next step. 418.50, cited earlier, is still important and would normally be overhead resistance. Therefore, I'll be taking another portion of the trade off in front of that spot. Now pay attention to this one. If they were to get above that for an all-day sucker back up north, I'll still have a stake in the game, meaning I'll still have a piece of the position left over. I would hold what was left for a gap fill. At 10:10 in the morning, at that point, we don't know whether that will or won't happen. There's your gap fill area up here, right around the big fat round number of 420. They made an intraday high of 419.99. No accidents or coincidences. Let's see what else we have. No change on the north side. 418.50 is the next exit and overhead resistance. This is a bona fide tour guide operation. Almost 10:30, an hour into the trading day, the tape has gotten quiet. No change to the numbers. 417 and 416.70 on the south side are gateways to lower. 418.50, if reached, is the next spot of overhead resistance. We've got a little hand-holding going on here. We're moving right along and we see a chart. Why do we see a chart? This is another very important component. This is coupled with, taught in the Lazy E-mini Trader course, discussed at night all the time in the Common Sense Market Analysis videos, and here, inside the numbers, traders get their PhD. 1042, awareness and food for thought. We don't know until we know, but this is what they're doing based on the hourly chart. Now, at 1042, that's what the hourly chart looked like. It's hard to see in this video, but there was a tail candle and there was a retracement underway. A retracement of what? A retracement of the tail candle. We teach this in the Lazy E-mini Trader course. Now, just minutes later, and in the spirit of funny how this works, just minutes later, they finished the retracement of the tail candle and they started moving higher. They got to the next profit target. I took a profit and cited the rest is trader's choice. Now it's a really nice trade. Let's keep going, see what else we have. And hopefully by now you get to see the point. And here's where we ended the morning activity, right around 11 o'clock. The closer they get to the big fat round numbers, the more magnetic force will draw price in. We discuss that all the time. They're basically home in terms of that. Closing candles above is uber bullish. It should be overhead resistance. Those of you that held a portion of the trade, home run derby, great job. This is a real-life example, a real-time, real-life example of how the commentary section of Inside the Numbers works for the benefit of Inside the Numbers members. If you're active in the SPY, options on the SPY, the futures contract, in the market during the trading day, then this is something that can benefit you by knowing the numbers, knowing the intraday schematic. If for nothing else, this gave you a pretty good idea of exactly how the commentary section of Inside the Numbers works. I certainly appreciate you watching. To your profits, I'm David Frost.